Okay, let's unpack those movements now. Gary Booysen, Director and Portfolio Manager at Rand Swiss, joining us this afternoon. Very good afternoon to you, Gary, and compliments of the new year. I wonder if that's still appropriate to say on the 10th. Needless to say, the markets today are not reflecting the positivity we saw yesterday after the jobs numbers came in on Friday from the United States. Really positive and indicating that the central bank in the United States might be a little less aggressive in its interest rate hikes. Today, not the same story. I think we're just over 1/3% in the red to end of the day. What would you say were some of the biggest movers there?
So it was pretty broad-based selling, and I think markets got maybe a little bit ahead of themselves yesterday. We had the opening up of China. There was a lot of excitement around comments out of the PBOC around potentially a quick return to normal for the world's second largest economy. And yeah, I think as you mentioned, with the jobs report on Friday being very, very positive, the markets got a little bit overexcited. I mean, they saw essentially the wage increase number coming in at 0.3% instead of 0.4%, which is what everyone was expecting. And suddenly there was this belief that inflation was under control and we might see a little bit of relief from the rate hikes. Now, we do have Jerome Powell speaking today, and yesterday we did have two other Fed presidents speaking, and they both just indicated that they expect the terminal rate for U.S. interest rates to finish above 5%. It's currently sitting at 4.25 to 4.5. So that's at least another 75 basis point increase. So we are still expecting a 0.5% increase on the 1st of February when the Federal Reserve once again meets. And the probability of that, if you look at Fed funds futures, is around 80% currently. So I think the market is just digesting this and just maybe remembering that we're not out of the woods just yet. And while it was very good news that China was opening up, and very exciting to hear that we're going to see more Chinese travelers and the Chinese economy was going to be more robust, those inflation concerns remain, and that's why I think we're seeing a little bit of selling.
What does that mean for the price of Brent crude, Gary? We've seen it at really nice lows, which is great for net importers of oil like us. The price are doing very well, and it's alongside a rand that has remained resilient against major global currencies. What does China opening up mean for the price of Brent crude and where we're likely to be headed?
Well, China is such a key export market for South African miners that, China opening up is very good news for South Africa in general. And we can see that in the commodity prices. So, the likes of Sibanye-Stillwater, for example, up 1.62% today. That was on the back of an upgrade from Deutsche Bank. But the one commodity that we don't want to see rising is obviously the oil price, because we're going to feel that in our inflation numbers. We're going to feel that in our petrol price as well. Now, with China opening up, there is an expectation that demand is going to be higher. But at the same time, it's not just the demand story. There's also the idea that Russia might take production out of the market. And this is just in response to those price caps that were put in by Ukraine's Western allies, capping any sales of Russian oil at $60 a barrel, even though Russian oil is actually trading below $60 a barrel at the moment. I think that fear that there could be a curtailed global supply, as well as increased demand, is just helping to lift oil prices, which is why we've got oil prices up over the last 2 days.
Mm-hmm. And then some company updates, Gary. Well, MTN getting into offering loans, so the financial service offering growing. And we're seeing a lot of retailers diversifying into the financial services space. What are your thoughts on that? And I mean, I suppose you could reflect on what Shoprite announced late last year in terms of them going into banking as well. Are these interesting and exciting times for these companies?
I think it is interesting, exciting times. The retailers are looking more like banks. The banks are looking more like retailers, and the telcos are trying to be both retailers and banks. So there's definitely a convergence in the three sectors. And I think that's because they're all so reliant on technology and data. and just that data helping them to personalize products and expand their marketing campaigns and really tailor their user experiences. So they all kind of looking over the wall and saying, hey, we can do that. So as you say, MTN announcing today that they're going to be offering personal loans between 2,000 and 180,000 rand. Now this is really just catching up with something that Vodacom is already doing. But as you say, this is all part of a much bigger landscape where everyone is trying to almost get involved in each other's businesses as I suppose the industry and all three industries become more competitive.
Very interesting times indeed.